Good afternoon, everybody. Thank you for joining us for this webinar. It's the IPSE, which is now becoming a weekly webinar on the COVID-19 update. And also we will touch on R35 again. So a lot of what we're going to go through today, if you joined us in the last 2 weeks, we're going to go over quite a lot of the same ground. There has been some changes and we will update on those. There's also new contact details to get to us at the end of the webinar as well. So although you might find some of it repetitive, there are a few new nuggets of new guidance from the government, new links to that guidance within this webinar as well. Now, before we get going, could I ask you just to put into the questions whether you can see the slide? You should see a slide in front of you which has a lovely pinkish kind of hue to it this week, and also the names of the presenters, and you should be able to hear me, hopefully. So could you let me know if you can see the slides and hear us? Thank you. Okay, great. While you're doing that, I will quickly introduce my co-host today. So I'll introduce myself first. My name is Andy Chamberlain. I'm the Director of Policy at IPSE, and I'm joined today by Alistair Hutchison, our Policy Development Manager. Alistair, are you there?
Yep, good afternoon.
Oh, there's always a worrying delay when you speak, Alistair. I thought you weren't there for a minute, but you are there. I can hear you, so I hope everyone else can hear you too. And Ryan Barnett, our Economic Policy Advisor. Ryan, are you there?
I am. How are you?
Great. I'm very well, thank you, Ryan. Okay, great. So we're going to keep going. I think that you are all saying that you can see and hear us, which is brilliant and fantastic, and the technology works wonderfully well, and thank God it does. Otherwise, we'd never be able to get anything done under this crisis. So that's positive. So we are going to look a little bit around today. What are the schemes which have been announced so far? What new do we know about those schemes? What does it mean for limited company directors? What about people who aren't included in the schemes? Let's have an update on R35, and then a detailed look at what's going on with the various packages which are out there, which Alistair is going to go to. But first of all, I'm going to hand over to Ryan, who's going to talk about the self-employed income support scheme.
Thank you, Andy. So yes, I'm going to take you through the scheme set up by the government a few weeks ago now, a few long weeks ago now, the eligibility for that scheme, how it will be delivered, and crucially, of course, those that can claim from the scheme and those that cannot. So to start with, sorry, I just had a little technical difficulty. I'm all good. So as I said, this is the scheme, the SEISS, as we're calling it, the Self-Employed Income Support Scheme, outlined by the government on the 26th of March, so it's a few weeks ago now. Prior to that, IPSE, working with particularly the Creative Industries Federation and a range of other bodies that represent freelancers, contractors, and the self-employed, covering dentists, musicians, particularly people in the creative industries and beyond. We set up a petition and put together a proposal which called for an income protection fund, and we got it out on all of our sort of social media channels and into the media as well. And 200,000 people signed up. Caused a bit of a stir. We had Philip Pullman and Stephen Fry sign up, which was pretty cool, and the government started to listen. So the proposal we put together was originally meant to cover all self-employed people. Crucially, that meant covering the limited companies, people that have become self-employed in the last sort of year to 18 months. And there was no specific cap around profits. We also made some recommendations which weren't outlined in detail, but that the government should try and take account of people that are taking gaps or people that might have been working during the last few years. The scheme was somewhat based on what Norway and other countries have put together, which is fairly similar to what the government have put together for the employment scheme, and a bit to the SEISS scheme, which I'll come on to in a second. And when that proposal was put together and put to the government, we were eventually contacted, along with a lot of other representative bodies, about our ideas for the scheme, some of which sort of made it into the final proposal. So if we go to the next slide, so I'll map out now who the eligibility criteria for said scheme. So the crucial thing is that you must have filed a tax return for 2018-19 minimum, and you must still be operating as a self-employed person. If you have filed in 2016-17 and 17-18, HMRC they'll use those to calculate your grant as well. This grant is calculated based on your profits, but averaged over those 3 years. So that means if you've made 10 grand profit in one of those years and 100 grand profit in one of the other years, the other year, depending on how much you have made in profit, if the 3 of those averaged together are below 50k, you will be eligible for the scheme. However, you must also be self-employed, and that self-employment must cover more than 50%, we think, of your employment. It must be the majority. There is a little bit of a lack of clarity over exactly how that works, so hopefully we'll get a bit more from the government in time, but they generally say more than half. Yeah. And crucially, if you are self-employed and you do qualify for the scheme, you can still operate and claim the grant. This is mainly for 2 reasons. One, of course, the government, the last thing it ever wanted to do was shut down the economy and wants firms to still run if they can, as long as people are at a safe distance, etc. Precautions are being taken. But one of the main reasons, they think that self-employed people, obviously, in certain trades in particular, so you can see construction is still running in a lot of cases. But the example given out by the government is of an elderly couple that's isolating for 12 weeks. They live in a house, the boiler packs in, someone needs to go around and fix that boiler. Who does that? Most of those people will probably be self-employed. So there are cases where the government really wants self-employed people to keep working. And of course, construction is the one that's got most of the coverage in the last few weeks, because a lot of construction sites are still open. So we go to the next slide, Andy. So how will it work? You will be written to by HMRC if you are eligible. That letter or email will come with some details on how you can access that information, and basically you'll be confirmed. You have some sort of number given to you. And then the government are saying that the grant, which will cover the months of March, April and May, backdated the 1st of March, although this could of course be extended, that grant will be paid to you in a lump sum, and preferably by the 1st week of June is what they've said, hopefully beforehand, but that's what they're kind of giving as a rough date for when that will be paid out.
Ryan, can I just jump? Sorry to butt in.
Sure.
I just wanted to sort of point something out, because we've had a few emails and queries about this. Some people are saying, well, when are HMRC going to write to me and let me know that I'm eligible for this grant, this SEISS payment? Because my friend has been told that they are eligible, and they've had something from HMRC. Now, I spoke to the Treasury yesterday, and no communications have gone out about this from HMRC or anyone else in government, right? Unless the person I spoke to at the Treasury, something else was happening they weren't aware of, but they didn't think so, okay? And furthermore, they're probably not going to come out for a good couple of weeks yet, right? So we're quite possibly looking at maybe the beginning of next month before those communications are sent out. This is important because if you have had something which looks like it's from HMRC saying, oh, you have a, you're eligible for this SEISS payment, please send us your bank details, it is a scam, right? There are scammers out there, we think, who might be operating and taking advantage of this scheme. So be really wary of that. And just inform, if you're being told by your friends, well, I've been told that I'm eligible, just say to them, be very careful with those communications, because to the best of our knowledge, those communications have not gone out. There is no one who has, as of yet, has been sent a legitimate message from HMRC or any other part of government which says this SEISS grant is going to apply to you. That will be coming, but it hasn't gone out yet. And sorry, Ryan, just butting in a bit further. We've also noticed a few of these kind of ambulance chaser kind of accountants, and they're quite possibly not even accountants, who are saying, we'll do a tax return for you on a no-win, no-fee basis. And this is because the government has been given, everyone until the 23rd of April, this April, to do their tax return for 18-19 if they haven't already done it. They should have done it by the 31st of Jan. But what the government have said is, look, we think there's about 600,000 people out there who are due to send in a tax return, and for whatever reason they haven't done. If they do it by the 23rd of April, they can still apply for this scheme, right? So that's good. But what that has led to is a few people saying, hey, if you still need to do your tax return, come to me and I'll do it for you on a no-win, no-fee basis, which is a funny way of putting it. What we'd say to them is that they're trying to grab a bit of this money, which should be going to the self-employed people. So go to a legitimate accountant that you already know, or even do it yourself, because you might be able to do it yourself and then you'll get the money. Just be wary about those guys. That's it, Ryan, from me. Sorry to back in there. Carry on.
No, that's very, very useful. And I was going to say, I meant to clarify that the government have extended the amount of time that allowed for filing your last tax return. So yeah, just to recap, you'll need to have had filed, unless you're one of those 600,000 potentially people, in at least 18-19, but 16, 17 and 17, 18 will count, and you must have operating profits in that period on average below 50k. So coming back to this slide, the grant will cover those 3 months, March through May, as I've already explained, and you'll be paid a lump sum hopefully by the beginning of June, preferably before, we'd like to think. And the government have sort of intimated that if they can do it before, then obviously they will. And that grant will cover 80% of your average income, but on a monthly basis. So of course that means it's capped as well at £2,500 per month. So a maximum grant will be £7,500. Sorry. And we've had a lot of questions come in around, well, will I have to pay this back? Will I, if I apply for universal credit or if I get work, will I be taxed on that grant if I'm eligible? Basically, if you're eligible to receive this grant, try and treat it as if it's normal income, because that's the way the government will treat it. You will be taxed as you normally will with a tax return at the end of the year, etc. And some of that money will get back to the government that way. But you won't have to pay it back if you, it's not a loan, it's a grant, but you will be taxed because the government will treat it as standard income. So we'll go to the next slide. And yeah, cool. So obviously, as you may have realized already prior to this webinar, but also with some of those parameters outlined, not everyone is covered by this. And as I said in I think my first slide, we were very much intending when we put together this proposal and put this to the government that limited companies need to be taken into consideration of course, as well. However, they are not covered. It only really applies to sole traders and also partnerships. But Andy will go into a bit more detail on this in a minute, because there's a lot going on in that regard, and we are still talking to the government. So aside from limited companies specifically, which are possibly one of the biggest groups, the scheme doesn't cover the newly self-employed. So if you haven't filed a tax return for that period that I've discussed before, in 18-19, you won't be covered. But it also therefore penalises people that became self-employed towards the end of that period, because people start up businesses, you might be dipping your toe into the market, etc. You probably haven't made that much money, or you just haven't, you've transitioned and it's, say, you know, October time, and you've only got a few months to make any money. So what you would be eligible for now is quite small. Us at IPSE, we believe that it would be possible to allow contractors to promptly file for that the tax year closing now, immediately, really, you know, quickly put together a tax return, and it wouldn't, we hope, make too much of a difference. But those people could be, you know, eligible for that scheme. Another big issue around the parameters of the scheme is the 50k cap. Again, we didn't call for this in our original proposal. The cap is a bit of a sharp cliff edge. So if you're on 40, you get if you're eligible for £49,000 worth of profits, that is not that different to someone whose profits over the same period of £51,000, but they'll be treated very, very differently. That cliff edge is very, very sharp. We've suggested on occasion to the Treasury, and will continue to do so, that a taper to avoid that sharp cliff edge would be the easiest way of easing this cliff edge, and it doesn't punish profitable businesses, people that have put their life and their passion into this work to build a business aren't unfairly treated to someone that's earned slightly less than them over the similar period. And also, if you've taken a break from self-employment, the main example is maternity, but people go back to employment perhaps, or they're, as I said before, transitioned out of employment into self-employment. Some people will have gaps, and those gaps won't be considered in that calculation either. So there are some sharp edges to this scheme. There's quite a few different groups that miss out. We're communicating with the Treasury as and when our ideas, and Andy will outline some of those in a bit more detail, specifically for limited companies in a moment. If I hand over to you now, Andy.
Thanks very much, Ryan. I mean, what you're saying is absolutely right. So there is these kind of, it's a rough and ready calculation, this scheme, right? And for some people, it's pretty good. It's not bad. It's actually unprecedentedly generous as a government scheme, saying, look, you're not working now, but we'll give you 80% of what you would normally earn in this period. The problems are that it's based on historical data, so it doesn't really account for what people are earning now. As you say, if there are gaps, it doesn't account for it. The cliff edge of the 50k, you know, all of this is problematic, and it does mean that some people are missing out. Now, as Ryan says, we are saying when it comes to the newly self-employed, this is people who only have been working as self-employed since April 2019. They haven't done an 18-19 tax return because they didn't have to. They weren't working. They didn't have any profits or any earnings to disclose. So we're saying, look, we've now got to the end of this tax year, right? It finished at the weekend. So why not give people another month from now to get in their 19-20, the most recent tax year that's just happened? Give them a month to get that in, and then we can account for that, and it could be considered in the calculations. It could also help those people who only have that tax return. The government on that one say they're very worried about fraud, and they don't mean fraud of sort of cheeky individuals or mischievous accountants trying to sort of bump up the profits and, you know, trying to claim a bigger grant than they would otherwise be eligible for. What they mean is serious organized crime, making up entirely fake IDs and submitting totally false tax returns to sort of try and ferret away money, and that's their big concern with that. I think this is a real problem area because I do think there's a genuine population of people out there, and it's quite sizable, who are missing out on this scheme. And we are saying this to the government, but I don't want to get anyone's hopes up. At the moment, they are not minded to. And I think, Alistair, if you're there, you were following Rishi Sunak on Twitter the other day, and he did appear to sort of rule this out, this idea. Now, that's not going to stop us from calling for it, but it's just a bit of a management of expectations.
Yeah, I did. Yeah, he was asked. He did a kind of live Q&A on Twitter, and this was actually one of the most common questions that came up, is for the kind of newly self-employed. And really, the two big concerns that he cited were, one was which, you know, regardless of our opinions of these matters, that was the position he was coming from. One is administratively, it's difficult to kind of get an additional rush of you know, files to deal with and to process while they're already doing these historic tax returns with one group of self-employed people. And then the second, as Andy says, was around fraud, which is, you know, I think our position is it's better to kind of get money out to people to try and capture as many sort of deserving, you know, self-employed people as you can, and then you can possibly go back and claw back what has been fraudulently claimed afterwards. But at the moment, that is their position.
Yeah, thanks, Alistair. Yeah, and on the 50k cap as well, like Ryan said, we're saying, look, you know, it's not that complicated. You just put in a taper so that, okay, up to 50 grand, you're entitled to 80% of your earnings, which, by the way, you don't quite make it there because of the 2,500 a month cap as well. But you're entitled to 80% up to 50 grand. Go beyond that, up to 60 grand, you get 70%. You know, you can sort of see how you can begin to sort of taper it down. So that the Chancellor is very worried that there are some self-employed people, often partners of law firms and also some sort of like prominent sportsmen and things, who have 200, 300, 400, 500 grand a year. he doesn't want to give them anything. Well, the taper would account for that. The taper would run out of gas way before you got up to that level, but it would help those who were just over that 50k limit. At the moment, as I say, it's again, we're saying it, the government is resisting. So I don't want to get anyone's hopes up, but I will promise you that we're going to keep pushing for it because we think it's the right thing to do. Right, I better move on. And by the way, I didn't say earlier, but please do send in your questions in the questions box, and we will try to leave some time at the end and answer as many of them as we can. Those that we can't answer, what we do is we get a spreadsheet of them, and then we group them together and we put them into our FAQ page on our website. It's actually really helpful for us to have those questions because it lets us know what people want to know the answers to. So there's a good chance you'll find the answer to your question in that FAQ as well. Okay, the limited company directors. So this is another group that have been that SEISS doesn't apply to. The self-employed income support scheme does not apply to SEISS. It does not apply to limited company contractors. Now, this is because it only applies to sole traders for whatever reasons, but that's the way it is. Now, the job retention scheme, which is the one about the furloughing and the one which is largely designed for employees, which is in the news a lot today, actually, because it's clear that it's going to be hugely expensive for the government and more people are being furloughed than I think that they perhaps thought was going to originally be the case. The job retention scheme does apply to limited company directors. Now, we've been saying this pretty consistently from the outset, that they can do this, but only for their salary, not for their dividends. But there was some doubt about this over the last few weeks. There is now new guidance which makes it absolutely explicit that this is something which can be done. If you're a director of your own company, you can make use of the job retention scheme. And there's a link at the bottom of this slide which will take you to a page full of information about that. And there is a paragraph in there, and it's on the gov.uk website. There's a paragraph in there which is entitled Company Directors. It makes it absolutely clear that they can make use of it. The problem is that it's only on salary and not on dividends. And a lot of limited company directors, the vast majority of them, as far as I'm aware, will take a relatively small salary, possibly even no salary, and then will pay themselves in dividends for the rest of their income. Which means that under the job retention scheme, a director who decides to furlough him or herself will be entitled to 80% of not an awful lot, because their salary is not an awful lot. The whole dividend income has been, what the government are saying is, we can't deal with dividends. We can't work out a way to replace dividend income because we can't distinguish between dividends which have come from the profits of someone's own company and dividends which have come from perhaps a share portfolio or shares in another person's company, in some other company somewhere else. And so they're saying we're not going to do it for that reason. Now, this has been the cause of much frustration. It's not just us, but it certainly is us as well, that are saying, well, hang on a minute here, surely there's some way to get around this problem. And also, I've been beginning to wonder how many limited company directors are there out there that, as well as taking dividends from their own company, also have dividends which come in from, say, a share portfolio. It might be that there's quite a few, but I don't think it's going to be all that many. So it's a relatively small population of people that we're not doing this thing which would help an awful lot of people because it might overly benefit a small population of people. That's slightly the wrong way around for me, and we're starting to press government on that one a bit. There are some ideas about how you might distinguish dividends. A lot of it comes down to the fact that, of course, there's a paper trail and you can look in company accounts and it will show that a dividend has come from where it's come from and where it's gone to. To be fair to the government on this one, what they're saying is that would require a manual check. A person would have to sit in HMRC and collect all that information, check it through, understand that, yep, that dividend came from there, stamp it and pass it on. And bearing in mind that we may be talking about hundreds of thousands of applications into this thing, you can see why it would take them months to do it, and it would delay the rollout of the SEISS scheme if they were to include that, and if they were to take the view that they had to check everyone beforehand. What we're beginning to say is, look, well, what we've actually been saying from the outset is, why not adopt a pay now, claw back later principle? So, as I've said, I'm not sure there's going to be that many people claiming dividends from outside their company anyway. But for those that do, you could do some spot checks, and you could, retrospectively, as they do in the tax system, and you could say, look, you claimed a grant here for a dividend that didn't come from within your company, so either we want that back, or possibly even tougher measures than that. Say it was a fraudulent claim. You could also, the way that the SEISS is going to work, as Ryan says, is that people will be written to, they'll be invited to go online and fill out a fairly simple form. You could have an extra question or two in there for limited company directors, which says, what proportion of your dividend income has come from your limited company? And you either say 100% or you say X amount. That people would therefore have to be honest there, or they'd be telling a lie to HMRC, which could get them into trouble. I think that a few of these simple measures would actually diminish that risk of overpaying people quite substantially. So I'm beginning to find this one, I think we all are finding this quite frustrating. And there's a lot of people in other industries, the creative industries, who are finding this a really, really tough barrier. And there's a bit of a campaign building up on it, and we're definitely going to be behind it. If they didn't want to do the SEISS, you could also say, well, you're in the job retention scheme anyway, so why not include dividend income within that? And perhaps that's a better way to go. Plus, there's no salary cap in that one, which might be beneficial to a lot of people. There is, though, the requirement to furlough yourself, right? So if you do the job retention scheme, the director has to furlough themselves. Now, when they're on furlough, they can continue to carry out the statutory duties of their company, but they can't go and find some work elsewhere. They can, but they can't go and do income generating work for their company. However, they can go and find work elsewhere. Sorry, that was a bit of a confusing the way I said that. So directors, you can furlough yourself, you can still carry out statutory duties of your company while furloughed, but you can't go and get income for your company. However, you can go and work elsewhere. And I can't see anything that would stop you actually setting up another company and working for that company. Now, that probably would need to be clarified by the government, but there are those ways around it. So for me, I'm beginning to think that if we could get over the dividend hurdle, if it's possible, I think that you might be better off in the job retention scheme than in SEISS. Anyway, parking that, because the government are still saying no to the dividend arguments, that they are coming under pressure on it. There are other things that you could do as well, such as, what about doing something like a generous tax break for limited company directors, so that those that have a savings pot for tax can start dipping into that now, knowing that they won't have to pay it to the same extent that they thought they would previously. Or a sort of expansion of the business grants that have been going out. So there are grants that are available for businesses with premises. And maybe on top of that, all businesses should get a grant based on their company profits. Limited companies could then apply for that grant. And once that money has come into their company, they can then draw it down as dividend for their personal income. Because it's all about keeping people going, their households going with that personal income. And we've put these ideas to the government, and we're going to continue to press them on it. And just one final thing on all of this, and the limited company directors, is I've said this for a few weeks in a row now. I've been pretty consistent on this, that if you look at what happened with SEISS, when the government announced it, when the Chancellor announced it, in the same breath, he said, and because we're doing this generous scheme for all you sole traders, we're going to put your NI contributions up. We're going to basically tax you more. We're going to look at the tax system, and we're going to seek to hike the tax later on in the year. I think that on the IR35 argument, right, which has now been delayed, I'm going to quickly cover that in a minute. The IR35 argument will become much harder for IPSE, and that argument would be you shouldn't do what you're about to do with IR35, by the way. That will become harder for IPSE if dividends are included and they enter into one of these schemes. Now, at the moment, it feels like people are saying, well, let's just worry about the IR35 argument when we get there, right? Fine, but because I am so embroiled in the IR35 argument, because IPSE, one of its core reasons for existence is to fight the good fight on IR35, I am nervous about seeking a measure which I think would diminish our arguments on that one. Nevertheless, we are looking for ways to get money into limited company directors right now because they need it right now. Okay, the IR35 delay. This is the only slide I think I've got on IR35, so it's just a quick one, but it's just to go over this. Lots of you already know it. Right, the private sector reforms to IR35, the thing that we all thought was going to be completely disastrous before this coronavirus nightmare happened, that has been delayed from April 2020. It should have been in place now, right? We'd have now put in the first week of the new system of the new IR35, and those reforms were basically going to make clients and agencies responsible for determining IR35 status and then liable for those decisions if they got them wrong. And when I say got them wrong, what I mean is if they said IR35 didn't apply, HMRC would come along and they would hold them to account and take them to a tribunal and get the tax off the clients and agencies, not from the contractors, which is how it has always been in the private sector. That's been delayed till next year. It's not an abandonment. The government are keen to stress that. But we at IPSE, of course, who have been calling for this delay and think IR35 should be abandoned in its entirety, we are going to spend the next year, once this coronavirus thing calms down a bit, explaining to the government why it was so obviously a disastrous bit of legislation, why so obviously it shouldn't be brought in, and why this is now an opportunity for a reprieve, for us to think about something better, an alternative system which is going to enable governments to feel a bit better about contractors and the tax they get out of them, but will remove this IR35 nightmare, which has been catastrophic. It has been catastrophic even despite the delay, because it has come too late for some contractors. A lot of clients have stopped engaging contractors altogether, and that is because they were simply terrified of the IR35 rules. So the big banks were the first to go, and essentially what they did is they looked at this regulation coming in and they said, this looks like an absolute nightmare, which it is, because IR35 is notoriously complex and a nightmare. What we're going to do is we're not going to do all this IR35 status determination statement regime thing. We're not going to get involved in it at all. We're just not going to engage contractors. That's how we're going to get around this. We're not going to give anyone an IR35 assessment. We're just not going to engage them in the first place. Disastrous, completely disastrous for those businesses and for the contractors working for them and for the agency sector. The whole thing, complete nightmare. Now, our hope is that those clients are going to return to contractors over the course of this year. But we know, because we're getting some messages through from some people who are saying, my client is just sticking to its guns and saying that they won't put me outside of, they'll only put me on the payroll. They're saying, if you want to work here, you've got to stay on the payroll. So IPSE is going to do some work to try and get information into those clients that they don't need to do that, at least for a year. The problem is that a lot of the clients, I think they spent hundreds of thousands on new systems. And I think that they're just thinking, well, government say it's coming in next year, so we'll just carry on with this system anyway. But they shouldn't do, for two reasons. One, they're cutting their nose off to spite their face in the short term. Right now, we need short-term contractors that are easy to hire more than ever, right? So they should be removing these barriers like IR35 because they're allowed to. And second of all, I really believe that we have an excellent opportunity to turn this policy around this year, because it's so obvious that it's been catastrophic. And I think that we've got a really good opportunity to talk to the government about, look, let's do something else. So I think that those clients shouldn't be doing that. And my hope is that over time they will relax and they will take on contractors. And IPSE is going to do what it can to get in front of clients and tell them to do that. But of course, the clients, if you're Barclays Bank, you don't perhaps care what IPSE says too much, but we're going to do it anyway. And we've written to the chief executive of Barclays several times on this issue, regardless of what he thinks about us, we're still going to say it. And I've done a lot in the last year about getting in front of end clients. I've done seminars and webinars and all sorts of things, speaking to hiring organisations and saying to them, be careful with this IR35 thing. You can, if you engage with this properly, you can still hire contractors. You can still put them outside of IR35. And I intend to spend the next year saying, right now you've got at least a year before you even have to worry about it. And even then you can still hire contractors and still put them outside of IR35. So anyway, that's my IR35 rant over with. Thank you for bearing with me on that one. So I think I'm going to hand over to Alistair now, who's going to just talk through some of those last things on what is out there for contractors and self-employed people generally. Alistair.
Thanks, Andy. Yeah, I think for those who've joined the last few weeks, you'll possibly be familiar with the next couple of slides. So I've just refocused them slightly and kind of to reflect the questions that we've had coming in. as well. And really, if you've been listening to that, to Ryan's description of the SEIS and to Andy's overview of the situation for limited company directors who can furlough themselves and get 80% of their PAYE salary, but not their dividends, if you've been listening to that and sort of still thinking, what else is there, what's out there, this will hopefully kind of flag up a few things. So if you just want to go on to the next slide, Andy. Thanks. So the main piece of business support that the government has announced, which is open to sole traders and limited companies, is the Coronavirus Business Interruption Loan Scheme. These are essentially government-backed loans up to a value of £5 million, and they are available through 40 kind of accredited lending institutions, banks, and building societies. The government has said they will effectively pay the interest, and you will have no fees for the first 12 months of those loans. There is, of course, a risk that they are then uncapped in terms of the amount of interest that the lender can charge after that point. But for the first 12 months anyway, that's something you don't need to worry about. And as I've noted on the slide there, the only kind of piece of eligibility criteria for you guys listening, if you're freelancers, is that your business activity has to be operated through a business account, and the business must generate more than half of its turnover from that trading activity. You'll probably have seen quite a bit in the news on the interruption loan schemes. I suppose if I was to summarise the current status, there is massive demand for this from small businesses, large businesses, and we've certainly heard anecdotally a number of people getting in touch with us saying that they're keen to apply for it. The problem is the pipeline seems kind of squeezed at the moment, and the money is not getting out certainly as quickly as individuals applying for it would like, or indeed government would like. And one of the big sticking points to that was some of the lending criteria. So one of the big things that the government announced, I think it was on Monday actually, is they've said that there will be no personal guarantees, so not your house or anything like that, on any loans that are below £250,000. So that's taking away a kind of big blockage in the system, where a lot of people were kind of reluctant to firstly apply and then get those loans. So that is certainly an option. And anecdotally, as I say, there is some interest. I know a lot of freelancers are kind of skeptical about taking on kind of debt longer term, but that is an option to look at. The second, which I'll just kind of mention in passing because I suspect it's not core, but I would say if you're a sole trader or a limited company and you have a physical business premises, there is a lot of support available for you out there. There are a lot of policies that have been announced around business rate relief, particularly if you operate in retail, hospitality, or leisure sectors. And the government has also announced that you're eligible for a one-off grant of £10,000 if you're affected by coronavirus economically, and you are currently eligible for small business rate relief or rural rate relief. So I think if you've got a premises, then those are the kind of things that you should be thinking about. Small business grant funding, your local authority will be the key contact there for you. They're supposed to come out and contact you, but certainly don't be afraid about getting in touch with them if you think that you should be eligible for that and you've not seen money come through at the moment. So as I say, if you've got a physical premises that your business operates from, then that's one section where there is quite a lot of support. And if you just want to go to the next slide. So I think one of the big pieces, and certainly one which again we're getting a lot of questions on, people are finding it kind of a useful package of things, particularly, as I say, for those who are perhaps falling between the gaps in government support at the moment, is around help with taxes. So just to quickly kind of summarize what the government has announced here. So your self-assessment payment on account, which is ordinarily due to be paid to HMRC by 31st of July, that can now be deferred until January 2021. So it's an optional deferral. If you are still able to pay your second self-assessment, then you are still, welcome to do so. But that is an option to defer it until then. It's an automatic offer, so there's no application required to do it. And HMRC have said that they won't charge you any penalties or interest for late payment if you are if you defer payment of your July 2020 payment until January. And I think what we're kind of saying is, amidst all the difficulty, if you're one of those people perhaps who is eligible for the SEISS scheme, but you are thinking that you might not have money coming in from that grant until early June, then perhaps if you've put tax aside to pay your July self-assessment, then that's one kind of source that you can draw on there just to tide you over in the meantime. In terms of other kind of tax help that's available, I would encourage people as well to look at HMRC's time to pay service. So this is open for kind of all businesses and self-employed people in financial distress or with outstanding tax liabilities. And essentially it's a kind of, there's an online service, but there's a phone number there as well, which we've noted down. And if you get in touch with them, then you basically make arrangements which are agreed on a case-by-case basis, tailored to your individual circumstances and liabilities, to arrange deferrals of specific tax payments. So for limited company contractors, corporation tax is one of those that you can have a discussion about deferring until later on. And then another kind of bigger one is VAT. So if you're a UK VAT registered business and have a payment due between the payment until a later date, again, you can pay the VAT due as normal if you want to, but there is a deferral option there as well. And then the last one, which again might be of use, is companies can apply for a 3-month extension to be granted for their next date to file with Companies House. I think slightly different to the previous ones. This one requires an application. We've got more kind of link to the site to use on our FAQs page about this. The government is saying that applications will be made through a kind of fast-tracked online system, which should just take around 15 minutes. But as I say, unlike the VAT or the self-assessment deferrals, this is one that you will kind of have to actively apply for. But I think just because amidst all the other, big schemes and things, these are the kind of things that might be missed, so hopefully are a little bit helpful. And I've just noted down there, the government has created a kind of single landing page of business support, which we've noted the address there, and that really tries to capture every announcement that it has made. Obviously, as I say, there's information about these different schemes on IPSE's website as well, but that is also a good kind of one-stop shop. And then in previous webinars, I've kind of quickly noted, other bits and pieces that are floating around there, perhaps more personal finance related than your business options. But you'll have seen that banks and building societies, a lot of them have kind of loosened up some of their lending criteria and trying to improve access to finance, giving a bit more support on things like overdrafts as well. Mortgages is another area where there has been an announcement that you kind of have sort of 3-month holidays for mortgage payments, which again may be something to tide you through. And similarly with rent, the government has said that it will pass some emergency legislation to make sure that renters, will not be evicted without 3 months' notice, I think it is. So there's a few things that are kind of floating around there. And I think the general message that we have is, look at our FAQ page, look at the government pages as well that we link to, and try and use all the levers at your disposal in terms of these options if you can. And the final thing, which I haven't mentioned too much on previous webinars because the information is getting updated quite a lot, but certainly the information on the previous slides around the kind of business grant and business rates relief, that is England only. What we are seeing and hearing is there's other options available if you are in Wales, Scotland and Northern Ireland. And I'm pretty sure, and this is my job for this afternoon to double check this, that for people in Wales, the Welsh government is actually going to be opening up grants to micro businesses, which would include the self-employed as well. So again, on our... Oh, sorry, on you go, Andy.
Just to butt in, yeah, I think that you're right about that in Wales, and I've heard the same thing very recently. And I was talking to someone at the IOD, who of course have also been doing a bit of work on the campaign around the directors, but they mentioned that in Wales. So yeah, just it's a good point, and we'll get a bit more information on our website up about that, because it sounds like they're doing something much more generous than elsewhere.
Yeah, absolutely. So at the moment on our website, we've got links to the devolved nations kind of general business support pages, but we'll certainly try and dig that up if that's a kind of specific scheme that they've got in operation there, because that's certainly something that sounds like it would be really useful for people to be pointed to.
Can I also,
yeah, on you go.
sorry,
That's all right.
very quickly as well, a lot of individual organizations, particularly in the creative industries, have begun setting up hardship funds, which we're putting more information on. I know the BFI are a big one, and I think the Musicians Union have as well. Often, and there's quite a few million quid being thrown at them. So you might, depending on your industry, obviously there's local government ones that I think Alice has already sort of touched on. But yeah, these hardship funds are being set up by local councils, but also other organisations, and we're going to try and put as much information on the website in regards to those as possible.
Yep. And I think my final piece, again, I've refocused this slightly just to really hone in on universal credit. Just on the next one, yeah, perfect. We've had a lot of questions on universal credit, both from people who still have some income coming in, some who have kind of seen their income kind of unfortunately come to a halt, and also depending on if you're a limited company or a sole trader. As I say, we've got information on our FAQ page about this as well. But broadly speaking, as much as people might not be used to the system, and there's a lot of stories around how kind of clogged it is at the moment, we would certainly say don't dismiss UC as an option for income. It's done primarily on your individual circumstances, so we can't kind of give a particular forecast of how much you're likely to get, whether you'll be eligible, until you yourself have kind of gone through that application process. But it is designed specifically for those who have falling income, low income, or those who are out of work completely. The one bugbear which we are certainly getting a lot of questions around and is causing a lot of frustration for people is the savings and capital threshold. So if you have over £16,000 of savings, then you are ineligible for the scheme altogether. And if you have between £6,000 and £16,000, then that is then factored into the amount that you can claim. We've had quite a few questions on what counts as savings and other capital. And the truth is the list is pretty extensive and will probably cover most things that you can think of. So that is, cash savings, money in bank or building society accounts, money in an ISA, premium bonds as well, money in stocks and shares, property is another consideration as well. So it really does unfortunately cover kind of a huge, range of your capital and assets. So if you're over that 16,000 number at the moment, unfortunately the government's position is really that you'll have to find a way to use those savings to get you through the next few months. In terms of how much you can get, we've flagged up there a website link to Entitled To, which is a really useful online calculator to get a quick estimate of how much you can receive. And that has been updated in light of the government's recent announcements, such as things that I've talked about before in terms of them increasing the standard allowance, so the amount that you can get in absolute terms will increase, and also removing the minimum income floor, which is the kind of thing that they use to give you a kind of artificial calculation for your self-employed income. So that's a really good website to check as well. And then just a couple things in addition to that. So you can claim universal credit while you're waiting for SEISS. There's no reason why you can't, and it will not affect the amount of the grant that you receive under that scheme. That grant is calculated on your past tax returns, and so it won't affect the amount of that grant won't be affected by UC. I suspect once the grant comes in, it will be treated as earnings, as Ryan said earlier, and then factored in. But certainly there's nothing stopping you applying while you wait for that money to come in. And then limited company directors can claim for universal credit. And as I say again, at the moment, our understanding is even while they are furloughed under the job retention scheme, you will still be able to claim. There's no reason why you shouldn't be. Again, it will just change slightly how you move through the application process and what you will be inputting in terms of your salary and things like that. We've had a few people who have kind of helpfully got in touch with us who are in that position and sort of said, I've applied for this as a limited company director. Here's what my discussion with the Universal Credit Helpline looks like in terms of, should I say I'm working or not? Should I say I'm self-employed or not? And so this is something that I think, again, we'll be putting up on the website just to kind of give you a bit of a steer in terms of how to work through that system. Conscious of time running on, so I think I've mentioned before, employment and support allowance. Again, that is a benefit that is available to the self-employed, but only for those who are sick or self-isolating as a result of coronavirus. And I think that's the final bit for me. If you want to move on to the last slide, Andy. And just as a kind of recap in terms of what we're doing, I think as Andy and Ryan have kind of ably talked about there, you know, we work with the government to try and put our 2 cents into the self-employment package, which, as we say, is very generous for those who are within it and quite harsh on those who are out of it. And recognizing those gaps, we're trying to kind of now lobby and campaign around increasing that support. We've got some research that's coming out hopefully at the end of this week into the economic impact of all this on freelancers, which we'll be sharing. And we've noted down a few links there as to how you can stay up to date with us. And as part of our kind of ongoing webinars, hopefully you've found these useful. We've got one next week with the Small Business Commissioner, Philip King. So he's the person who's in charge of, he's a kind of government body essentially that's tasked with chasing up late payment in particular, helping small businesses with their cash flow. We've met him a couple of times. He's a very, very decent guy. So he'll be on next week. So I think we'll have details of that on the website. So please do join us for that as well. And then I think we should probably answer a few questions if they've been coming in.
Yeah. Thanks, Alistair. Can I just say that email address that you can see there, covid@ipse.co.uk. We're really interested in collating those kind of hardship stories. So if you've fallen through the gaps that we've outlined here, or other gaps that we are unaware of, you know, let us know and tell us the story about what's happening to you and what impact that's going to have on you and your family, because that's going to really help us to develop our policy. And also that gives us ammunition to use when making those arguments, and everything you send there will be treated as confidential. We won't use anyone's names, but we might use those stories on an anonymous basis. And if anyone's got a particularly good one, then we might contact you and say, would you be interested in speaking in the media about this? Because sometimes we get media requests on that as well. So if you've got a story on what this has done for you and your business, this crisis, and you have the time to do it, then please do send something into there. Thanks. And yeah, some questions now. I've been taking a note. I've actually managed to see a couple of questions. So I might just tackle a couple of them if you don't mind. I'll jump in and do that. There's been a lot of questions on the furloughing scheme, or the coronavirus job retention scheme, or CJRS as it's known. So this is the one that's designed for employees, but limited company directors can make use of it, but only on their salary. And the qualifying aspect to that is you need to have been on salary on the 28th of Feb. So it's not since then, but you need to have had some salary before or on the 28th of Feb on the PAYE scheme of your company. And then that is how, however much you were paying yourself then, you'll be entitled to 80% of that under the scheme. Now it's not actually, sorry, go on, Ryan.
Of course, there's a long month in February, and a lot of people pointing out that actually the 29th doesn't count either, which has caused some confusion. Right.
Yeah. Good point. The key date is the 28th of Feb. Right. That's the key date. The scheme isn't actually set up yet. So a lot of people are saying, well, how can I claim this? Maybe one of my other presenters, my colleagues, can correct me if I'm wrong on this. But I think at the moment, I'm not going to apply for it. I think that it's not yet set up. Alistair and Ryan, do you think different?
So the actual scheme isn't properly set up yet, and the government put a pin down for the end of April. However, there is a link on, Andy did a great slide on limited companies, and there's a link at the bottom of that page with very newly updated guidance on how you make a claim. Now, that link was mainly pointing towards the limited company stuff more broadly, But the new guidance really outlines how that claim is made, just not the actual portal that you apply through. But you'll need a PAYE number, number of employees being furloughed, claim period, minimum length of furloughing is 3 weeks as well, something important to take into account, bank account details, contact information, and you'll have to actually calculate how much money you think you are due yourself. And that amount of money, we've also had a couple of questions about backdating, and that money will cover, well, it can cover up to being backdated to the 1st of March. So similar to the SEISS scheme in that regard.
Same as the SEISS scheme. Thanks, Ryan. And I've just pulled that slide back up with that link at the bottom there, so people can go on there. It's like a whole page. There is a paragraph on company directors, but there's everything else that you should, basically all the information which is available now on the furloughing scheme or the JRS scheme. That you can find it there. That's the government UK page. Also, I noticed there was still a bit of questions around the SEISS scheme and the whole £50,000 cap and how that's calculated. So I'm just going to quickly go over that again, and I might even move up to one of your slides, Ryan. It's all about the average, right? So you start off with, on this slide you can see now, we start off with the point that you need to have had a tax return done for 2018-19, okay, to qualify for this. If you don't have a tax return in then, but you have ones before then, the government are going to assume that you're no longer self-employed and you're not eligible. But if you've got that one, if that's the only tax return you've got, then they'll calculate it based on that. They'll say, what were your profits in that year? You're entitled to 80% of those profits, but pro-rated down. So you're actually going to get 1/4 of 80% of whatever you earn in that year. If you have a tax return for the 2 years before that as well, they will consider all three and they will average that out. So it'll be your average profits over those 3 years. You'll get 80% of that. They'll also, if you've earned over 50k, right, on average over the relevant period. So if you've got the 3 tax returns and over those 3 years you averaged above 50k, you will not get anything under the SEISS. It's the cliff edge. It cuts it over the average of those 3 years. But if you've only got the 1 year, 2018-19, it's just whatever happened in that year. And again, if you earn more than 50k, if your profits were greater than 50k, you will not be eligible for the SEISS. You get nothing. It's the cliff edge. We think there should be a taper, but currently that's not the way it's designed. Also, most of your income must come from self-employment. So more than 50% of whatever you've earned over the relevant period, and again, that's either the 1 year, 18-19, or up to the 3 years, if you have those tax returns filed. If over that period of time, 50% or more of your income came from self-employment, that's fine, you're eligible on that part of the income. But if it's less than 50% over the average, then you don't, you're cut out. And that's problematic for some people who are saying, well, you know, I was employed and I sensibly transitioned into self-employment. So in 16-17, it didn't make up most of my profits, just a little bit. 17-18, it was approaching halfway. 18-19, it was over halfway. But when you average that out, it's less than 50% of my total income came from self-employment, even though I'm clearly on a transition and now I'm fully self-employed. Doesn't matter, it won't be counted. So, I mean, this is why I say this is a rough and ready calculation in this scheme. It is really rough and ready, and there are going to be some winners and some losers within it. Okay, that's enough of me. Any other questions that you guys
There's a
noted?
few knocking around.
Those are the 2 main ones, Andy.
There's a few knocking around on tax, so I'll take them all as one. One was on VAT and when that would be paid by if you defer it. So if you choose to defer your VAT payment as a result of coronavirus, then you must pay the VAT that is then due on or before 31st of March 2021. So 31st of March 2021 is the kind of new date if you choose to defer your VAT. And then there was a question saying, so if your corporation tax is due in June, would there be an extension on payment date for corporation tax? As far as I'm aware, that would be one where you would probably have to discuss and arrange that with HMRC through the time to pay service. There's not a kind of automatic extension for that in the way that there is with the self-assessment or the VAT, as far as I'm aware of that. So for corporation tax, at the moment, from what I've seen, that's something you'll have to get in touch with that time to pay service as well, unless anyone else has heard anything to the contrary.
No.
No, that sounds right to me. Yeah.
And then there's another question on.
Probably got time for one more question if there is.
I've got probably maybe squeeze in another one. So does the self-assessment tax return deferral of payment from 31st July to Jan 2021 also apply to limited company directors? I would say yes. Yes, it does.
Nice.
Yeah, it does on the personal income.
Yeah,
I think it does. Yeah. You can defer the tax on that.
Yep.
But of course, what we're suggesting is, well, if you can't include the dividends in these schemes, then rather than having a deferral, why can't we have a nice generous tax break? So that rather than people saying, well, I'll defer it so I can use my savings for tax now, but then I'm going to have a big problem later in the year when I've got to pay that tax. Why not say to them, look, we're going to let you off some of that tax, and then that will make that's another way to get money into the businesses that need it. Now, with all these things, it's easy for me to sit here and waffle on about it, but it's complicated, right? It's not easy to do all this stuff, and I would stress that we do recognise that people in Treasury and HMRC, they've been working very, very hard to come up with these schemes under a lot of pressure, and it's going to be a great challenge to pull them off. Actually, a great logistical challenge. If you think about new payment systems and things for government, I mean, generally they go on for years and they're still delayed by 3 years, and they go over budget by billions of pounds and all of that sort of thing. So if they manage to get all this money out by the beginning of June, hopefully even a bit earlier, it will be because they've worked very hard at it. And these things are complicated, but of course it's our job at the same time to tell them that there are people that need this money desperately. People are desperate out there, and we are trying to think about ways that the government could put in place something which would reach those that at the moment are feeling like they're missing out.
Seeing a few questions about whether the slides will be available. Yes, they will. We post the webinars along with the slides up on the website, so you'll be able to get them afterwards. I'm conscious that we're over. Andy, I just wanted you, there's a couple of questions floating around which I just wanted you to kind of just nail down, because I see there's a few people. So firstly, what does profit mean under the SEISS? Is it profit? Is it income? Is it gross? Is it net? What are HMR seeing is profit? And then just because on that slide on the limited company directors, it says directors can secure 80% for employees, but not themselves. I think it would just be great just to, I know you've spoken about this a bit, but just to really clarify.
Yeah, sorry, I think, so sure. So profits, yes, it's gross profit, right? So if your gross profits, so basically, if you think of simple cash accounting basis, if your money coming in was 50 grand and your money going out was 20 grand, you've got gross profits of £30,000. That's the figure. So then you'll get 80% of that. That's how it will be worked out, which I'll try and do the maths on. I think that's £24,000. But then you get a quarter of that because it's for the 3-month period, right? So you'll be entitled to £6,000. That's how it works. I hope I've got those sums right. Someone I'm sure will tell me if I haven't. I've just done them all in my head. That's how it's worked out. It's basically your self-employed earnings, but it's after you've taken out any expenses. So it's what would you normally expect to have as your income, right? That's what we're trying to work out here. But it's before tax, because remember, this grant is also before tax. It will be taxed. So if you collect this grant and then you do some more work later in the year, which you're perfectly entitled to do while you're getting the grant as well, then all of that will be included in your whole package of income, and you'll pay tax on a lot of it, right, when the time comes further down the line. Yes, the bit, I had a bullet point, didn't I, which I think I just sort of, I've become so sort of tuned into this stuff that I just start sprouting it. So perhaps rather than going through the bullet points in an orderly fashion, sorry about that, for causing confusion. My point there, the reason why I put that in about directors can secure 80% of their income for their employees but not for themselves is because if you, as well as limited company contractors, as we call them, or personal service companies, as they're sometimes somewhat unhelpfully called by the government, where typically inside that what you've got is you've got one director who's the sole employee, sole director inside their own limited company. But there are other kind of limited companies where you might have 5 or 6 employees, or maybe 30 employees. And the point here is that what the directors inside those companies might reasonably be saying to the government is, look, you know, my income, my business, as the income demand's fallen off a cliff and the income's dried up. And very helpfully, government, you have provided this furlough scheme, so I can put all my staff on furlough and they will get 80% of their salary. They're going to be safe like that, yeah, and I can work that out for them with you using your money, government. But what about me? I'm the director and I can only get it on the tiny salary that I pay myself. I usually pay myself in dividends quite legitimately and quite sensibly, because I don't know how much money is going to be in the company, and it gives me more flexibility. I can invest in the company and things like that. So what you're sort of saying, government, is I can look after, you're going to look after my employees, but you're not going to look after me. And what that means is that I might have to close this business, which means the employees will stop getting the furlough, and when this crisis is over, they'll have no jobs to come back to because my business will be closed, because, you know, my business hasn't survived. If you were to provide me with some similar scheme, then we could keep the whole show on the road. That was my point there around the directors and the 80%, and that it kind of highlights the unfairness of these schemes, in that we're looking after the employees, but we're not looking after the directors of the companies. I hope that makes sense. Right, I think we better end it there because we've gone well over time now. Thanks for bearing with us. I can see we've had 250 people on this webinar. I'm sorry if we haven't answered your questions, but we will look at all the questions and we put them into our FAQs, as I said earlier, on our website. And as I said last week, I just want to say that, you know, we know that this is a terrible, terrible time for business out there. I mean, it's a terrible time for people's health too, and many of you who on this will know people who are suffering from that. But it's deeply worrying for people's incomes and people's businesses. And we are doing what we can do to put pressure on the government to ensure that those who need it will get some sort of help. And we are also trying our level best to collate all the information, all the different schemes, all the different UCs and the different tax deferral schemes which are out there, and put that in one place on our website so that you can come and find it there. So thanks for listening. We'll be back next week, as Alice has said, with the Small Business Commissioner. And then we're going to have further webinar the week after and the week after that as well. So thanks for listening and take care. See you next week. Bye.